This is Fintech Insider News. This week, Klarna is going to IPO in the Big Apple. Struggling Metrobank have been hit with a heavy fine. And we round up some of the biggest fintech stories from across LATAM this week. We'll be discussing all of this and more on today's show, so don't go anywhere.
This episode is brought to you by Atlassian. Atlassian makes the team collaboration software that powers enterprise businesses around the world, including over 80% of the Fortune 500. With Atlassian's AI-powered software like Jira, Confluence, and Loom, you'll have more time to do the work that matters. In fact, Atlassian customers experience a 25% reduction in project duration per year. Unleash the potential of your team at Atlassian.com. Atlassian.
Hello and welcome to episode 915 of Fintech Insider. I'm Laura Watkins, Director of Media and Marketing at 11FS. I'm joined this week on Fintech Insider News by some great guests who are here to break down the biggest stories from the past week in fintech and financial services. First up, a warm welcome for my co-host and 11FS colleague, Dave Morris, Global Head of Technology at 11FS. Dave, you've just spent the past week very warm in the Sahara. Welcome back. And please tell us what you were up to out there.
Yeah, this time last week I wasn't quite so cool as this in the air-conditioned office. I spent 4 days trekking across the Sahara for charity last week. So yeah, it was quite an exciting week. Great fun, very warm, and I drank a lot of water, which is probably
good.
Probably an important thing on that bit. But yeah, no, it was brilliant, really good fun.
Amazing. Well, huge congratulations on the challenge. Welcome back. Probably a break from fintech, I imagine, but back to the fintech news. And next up is a warm welcome back to the podcast for Miguel Armaza, co-founder and general partner at Gilgamesh Ventures and Fintech Leaders podcast host. Always great to have you on the show, Miguel. How have you been since we last spoke to you?
Fantastic. I'm just glad to be invited again. Thank you, Laura and Dave. And Dave, I wasn't quite in the Sahara, but I wasn't too far. I just came back last week from Saudi Arabia. Also very hot, but amazing trip.
Fantastic. And last but not least is another warm welcome back to the show for a Fintech Insider OG, Valentina Kristensen, Corporate Affairs Director at OakNorth. Great to see you as always, Val. How are things with you and how are things at OakNorth?
Good. I was saying I've just about recovered from the 11FS Awards last week, which were a lot of fun, and we missed you a lot, Dave, but I think you're a pretty good excuse trekking across the Sahara. And yeah, it's great to be back on the show. Thanks for having me.
Fantastic. Well, thank you for joining us. And that's our panel. Now on to the news. So our top story this week is actually a roundup of several stories, focusing on the LATAM region. So Nubank has reached 100 million customers in Brazil alone. Argentine star fintech Ualá wins fresh funding round from Alliance and Alan Howard. And Brazilian fintech Tako emerges from stealth with seed round led by A16Z and Ribbit Capital. So a lot to unpack there, but firstly, Argentine fintech Ualá has raised $300 million in one of the largest fundraising rounds for a startup in Latin America in recent years. They launched in 2017 and now have 8 million customers and banking licenses in Argentina, Mexico, and Colombia. And this raise takes their valuation to $2.75 billion. And Ualá say that almost a fifth of Argentine adults now hold an account with them, which offers debit and credit card payment services, loans, and investment products. Likewise, Tako, an employee lifecycle platform that automates tasks like onboarding and payroll to save companies time and bring all their employee information into one place, has come out of a stealth round with a $13.2 million seed round. The name Tako is Japanese for octopus, and its platform is meant to be the brain of employee data with tentacles reaching out into different areas of employee management. And finally, you can't talk about LATAM without talking about Nubank. And this week, they have reached 100 million customers in Brazil alone, which is 57% of the adult population in the country. In May of this year, it had reached this milestone globally, but now it's reached 100 million just in Brazil. So, huge amount happening in LATAM. Miguel, what's your thoughts on all of these? Obviously, as I just mentioned, we can never mention LATAM without mentioning Nubank. That's a huge milestone that they've reached. What does that tell us about the sort of scale of their ambitions and the impact that they're having?
Yeah, I mean, can you really be surprised? Obviously the answer is yes, but at the same time, the dynamics for the success of fintech in the region have been around for many years now. I mean, these companies have been executing for over a decade. In the case of Nubank, Ualá is almost 8 years old. But the reality is that, there's still a lot of opportunity, right? The reason why Nubank keeps crushing it is because there's still a huge chunk of the population, both Brazil and other markets, that continues to be dissatisfied with incumbents, right? And at the same time, Ualá is a completely different company in Argentina, but also competing with Nubank in Mexico, also, continues to crush it. So I spend a good chunk of my time actually investing in Latin America. At Gilgamesh Ventures, we have a global view. We invest in many markets. LATAM is one of those. And we've been seeing this the last, let's say, 3 years since the market started collapsing. The numbers of the companies did not collapse, right? The companies continue to crush it. The customers continue coming back, right? And in this case, we're talking about companies that give out credit to their customers, but it's not just that, right? In the payment space, you have a lot of companies growing, both online and offline. In wealth management, in any category in fintech you look at, it's fintech has been almost 50% of the total VC market in the region. And it seems to me that's not going away anytime soon.
Absolutely. And I knew you were the right person to come to first on this story. I'm so glad you were able to join us today to discuss this. Val, what was your take on this?
Yeah, I mean, I think, look, obviously it's a sort of similar trend we're seeing around the world, right? That customers have multiple bank accounts. I mean, I think one of the questions is like, oh, is Nubank sort of replacing the incumbents? And I don't think it is. I think it's just sort of it's complementing them, right? And in the same way that lots of people will have multiple bank accounts. Maybe they have a Monzo account and a Starling account and a Revolut account, and then they also have, a Chase or a Barclays or a Lloyds or what have you. If you look at Nubank, I think they've got about, I mean, as you say, they have over 100 million of customers. I think that is one metric, but obviously a very important metric is the number of assets, because that tells you how much those customers trust the institution and how much money they're actually depositing with the institution. At the end of the day, the amount of assets that the bank has, that determines how much they can lend, the profits that they're making on those assets, and so on. So they don't make money based on the number of customers they have, unless those customers are depositing good chunks of change. Nubank has about 43 billion or so of assets, which doesn't even put it in the top 10. I mean, of banks in Latin America, right? I mean, it's way off. It would need more than double that, and it would still only it would be the 11th largest bank in terms of assets in Latin America. So everything it's done to date times 2. And it would just about make it to 11th place in terms of assets for Latin American banks. So I think it's done incredibly well. Obviously, customers are very, very satisfied with Nubank. It's got, still very, very low customer acquisition cost. I think it's about $5 customer acquisition cost. So it's, there's obviously huge word of mouth, but I think we do need to look at some of those other numbers as well. Obviously, one thing that Nubank has done and has it's been profitable for many years, right? I think 2023, its profits were over $1 billion, which is really, really impressive. And obviously that's, I think, setting the bar very high for other neobanks and challenger banks around the world. Because it sort of clearly demonstrates that you can build a profitable high growth business. They added over 19 million customers in 2023. So they have a very low customer acquisition cost. They're acquiring, literally tens of millions of customers every year, and they're doing it in a profitable way. I think they've built a really, really strong business model. Obviously, still quite a bit of growing to do before they can sort of be considered one of the main banks in the market, as I say, because they wouldn't quite reach the top 10, until they've sort of doubled the amount of assets they have. But I think amazing growth, and we certainly look up to them as an amazing role model for the industry.
Yeah, absolutely. They're kind of like the case study, aren't they, on that growth and that profitability. However, on the Ualá side, they've also said that this fundraise will allow them to never raise capital again and to reach full profitability in all of their markets after already achieving that in Argentina in their home market. What's your thoughts on that, Dave? How important is that push for profitability in this market, particularly when funding's hard to come by, particularly when the economic climate's a little bit up and down?
I think it's the benchmark now for people. You look at any of the challenges out there is profit, and that's what people are looking to see. And that's where the challenges in the UK and their rush to see profit, and the same in any market now. If you're not getting to profit, you're not seen as successful, I think, anymore. And so, but the play that these guys are making, and I don't want to hark back to Nubank, but the way that they're approaching things like technology is very different to so many of the incumbents and things like that. They're the benchmark for technology for a lot of people. You and our CTO drools over their technology approach because it's seen as just the way to build a bank from a technology perspective, but gives them that flexibility in the way they can approach things, the way they can go and hit markets, the way they can bring new things to customers in a way that the incumbents can't.
Absolutely. And Miguel, on the Tako side, if I'm saying that right, a 13.2 million seed round coming out of stealth. That's pretty big, right? Like, what does that say about like the kind of market's faith in the solution that they're providing, and that kind of local solution for employee money management in the Brazilian market?
Yeah, I think it's just a recognition that the Brazilian market is big enough to create venture outcomes, right? For what funds need. You wouldn't see that kind of seed round in a much smaller market, right? But in Brazil, you actually can. I mean, Nubank is one example, but there are so many more, right? CloudWalk is a company that not many people have heard of. I believe they're close to 600 million annual revenue just with their Brazilian services, right? So, we're going to see more like that. And we are going to see more B2B focused companies, right? Just one quick thing before I pass on to Val. What Nubank and Ualá and many others have in common, aside from great technology and having a great leader at the top, they have built an amazing brand. And that brand has allowed them to onboard customers at a much lower cost, right? I believe for Nubank, they are paying 6 to 7 times less than the traditional banks for every new customer. So branding has been crucial for these two, and I think their numbers are a reflection of that.
Yeah, absolutely. I think, as I said, the customer acquisition cost is about $5, which that certainly was the cost, at least at the time that they IPO'd. I don't know if it's changed materially since then. And I think that's again where you look at the sort of some of the metrics, right? And you sort of talked about their use of technology. I mean, Nubank has one of the best efficiency or cost income ratios in the world for any bank, right? They've got about 32%. By comparison, Starling is sort of over 50%. Monzo, I think, is still in sort of 3-digit percentage numbers. So, they have an incredibly strong cost income ratio as well. And a lot of that efficiency gain comes from their use of technology. So I think, again, it's just looking at some of these other metrics. I know, we all love to celebrate customer numbers. Obviously, Revolut is doing a big event with Wired, I think, in a couple months' time. To sort of celebrate passing 50 million customers. But it's then kind of delving a bit deeper into some of the metrics that really tell you about how the bank is being run, what the customer acquisition cost is, what the efficiency or cost to income ratio is, what's the average deposit amount, or how many assets does the bank have, because that will really ultimately tell you, how customers feel about using this. We all know that you can onboard lots of customers and they don't end up using the product. It's just an app that sits in their phone, or, they have some login details, but they don't actually use the products day in, day out. So, those are the things that I think we should look at because they can give you a sort of a much clearer picture of the success of the institution. And in Nubank's case, it's really market leading in a number of those areas.
Mm-hmm. Absolutely. Dave, we're nearly out of time on this. There's a lot to cover, but please round us off.
Yeah, I think that the way it's used, I think, is very different for Nubank. If you look at the typical Revolut user uses it occasionally when they travel, unless you're traveling all the time. And so I think the numbers don't show out in the same way for someone like Revolut as they do for Nubank, where they really are being used a lot. I suppose they're doing some really innovative things as well in the sort of Fintel play with linking into mobile and things like that, which I think is actually making them differentiate as well in the markets that they're playing in quite a different way as well.
Absolutely. So we're kind of out of time on this one, but there's always plenty to say and plenty to keep an eye on in LATAM. As Miguel said, there's so much happening, so many new companies, so many new areas of expansion as well. So we'll definitely be keeping an eye. But I'm going to move us on to our next story, which is that Klarna has filed for an IPO in the United States. So this was in the FT and everywhere. It's been long rumored, but it's now finally happening. The Swedish buy now, pay later pioneer has filed for an IPO in the US, submitting initial documents confidentially to the SEC. The timing of the IPO will depend on market conditions following the SEC's review. Once valued at $46 billion, Klarna's valuation dropped to $3.7 billion in its last official funding round in 2022 amid a sharp reevaluation of fintech companies. Governance tensions have marked Klarna's recent history, with a high-profile split between CEO Sebastian Siemiatkowski and co-founder Victor Jacobson, who was recently removed from the board. So a lot happening in the Klarna story. Dave, we sort of said 2025 would be the year of the IPO. Klarna have maybe got a little bit of a jump on that. Well, what do you think?
I think it's an interesting move for them going to the US for that. Obviously it's the market they want to grow in. Because if they're really going to be successful, they have to break the US. So it's a sensible move to go and IPO there for them. Timing probably good. The markets are happy at the moment, particularly with probably the markets are happier with what's happened in the election in the US than some of the people outside of the markets. So it's probably a good time to go there to the US market for an IPO perspective at this stage.
Val?
Yeah, I mean, look, I think I would sort of argue that they've broken the US, right? I mean, in November last year, they sort of put out a press release saying they had over 37 million customers there, and that was a sort of 32% year-on-year growth. So, assuming that they've had a similar amount of growth this year, they should be well over 45 million customers now in the US, which obviously is if you think as a proportion of the adult population is pretty strong. And they've got, over tens of thousands of retail partners now. Again, about a 38% year-on-year growth. Big names, Macy's, Nike, Airbnb, Instacart. I think obviously with Trump coming in, it's going to be interesting to see what happens with regards to interest rates and inflation, because obviously that can have an impact on the credit market, and therefore it could have an impact in terms of buy now, pay later, and the consumers that that they might be, that they'll obviously be targeting. I'm not super surprised that they were going to the US, because I think, in addition to the fact that they've got tens of millions of customers there, and it's a very high growth market for them, right? Sort of over 30% year-on-year growth across both retail and consumer. I think obviously in the US, there's also, for a lot of these big brands, a lot of the time they won't partner unless you are a public company, because it's sort of, they need that level of transparency. They need that credibility that comes with a public company. And so in order for them to secure some of the larger retailers, there's probably a little bit of we need to make sure that you're a public company. We need to be able to see what your accounts. We need to be able to feel like you're a business that's going to be here for the long term. So, obviously we've got a number of other IPOs that are expected in the next kind of months, years to be announced. Other big companies like Stripe that obviously, while they might have started in Europe, they have huge numbers of customers in the US now, and that's the expectation, is that they would list there as well.
Just as the other Brit on the recording, do you think this is a loss for London? Do you think people are disappointed that it hasn't listed on the London Stock Exchange? Or, obviously all Val's points are valid, but like, does that outweigh the kind of lust to put it on the London Stock Exchange versus the, rationale for going to the US?
I think it is a loss for London. Absolutely the right thing for Klarna. But it is a loss for London, for sure.
Yeah. And could that set a precedent as well for all the others? They all go to New York, even if they're British companies. What do you think, Miguel?
Absolutely. I think at this point, the London Stock Exchange is in a lot of trouble. I don't even know why any tech company around the world, not just in Europe, would even list there. And I have a very concrete example. On the podcast, I interviewed Michail Lamtadze, who's the CEO of Kaspi. Kaspi listed on the London Stock Exchange in 2021, was traded there for 2 years. And in 2023, they decided to delist and move to New York and trade on the NASDAQ. And something that he told me is their trading volumes have gone up 20x, right? So there's a lot more appetite from investors. It's not just about the customers and partnerships. It's also about trading volumes. I really do think that's one of the conclusions, that the London Stock Exchange is in serious trouble.
I mean, look, I think liquidity is definitely something, right? The depth of liquidity in the US is just it's a different level. I mean, to put that into context, Tesla stock trades 2 times more a day than the entire FTSE 250. Just to put that out there. So, I mean, I appreciate Tesla stock is one of those, probably a bit of an outlier, especially now post election. But I think that is one of the things, right? I mean, what's the reason that a business would list? It's because they need liquidity, it's because they need capital, it's because they want the sort of the branding benefit that comes with it, or because they need the sort of credibility that comes with it, as I said, to sort of secure some of those contracts, or it could be a combination of all 4 of those. And certainly, you get all those things in spades with listing in the US. I don't think, there's obviously been a huge effort to make the UK a more attractive listing location, to make London a more attractive listing location. And obviously, if you're not a business that has any operations in the US, I think you do need to question whether it makes sense to list there. I think that in Klarna's case, in cases like Stripe, it makes total sense because they obviously have a big US brand. They have millions and millions of US customers. I think there's more of a question mark about some of those other fintechs that have obviously, announced plans to IPO imminently or within the next few years. Businesses like Starling, Atom Bank, Zilch, Revolut, Monzo, etc. I mean, they, while Revolut and Monzo obviously have made attempts to sort of move into the US market, I wouldn't say that they're obviously at the Klarna or Stripe type levels. So it'll be interesting to see with them. I think it's more of a question mark there as to whether they decide to end up listing there, or if it makes more sense for them to at least initially list in the UK. And then, as Miguel said, maybe they look to delist and relist at some point in the future.
But the LSE is really hoping they do, though, for all the reasons Miguel just said, that there's sort of a drain away from them. I'm sure they're hoping that the homegrown sort of darlings will list with them.
Yeah, but it does have a bit more of a blue chip feel, though, than the NASDAQ.
Very true.
Yeah. Even, I mean, look at Nubank, 0 operations in the US, only, Latin America. They're a New York Stock Exchange company. There's a long list. That's the beauty of the US market. If you're a good company, it doesn't matter where your operations are. I want to add something about Klarna. I think they were very, very right in taking that massive down round. I think it was 80% down round. As soon as the market collapsed, right? They just ripped the Band-Aid off very quickly in early or mid 2022. And hey, now it's a comeback story. I mean, Facebook, as many of us might remember, they took a down round as well, 30% down round before going public, and it worked out for them. And it's funny to me that there are still CEOs today in fintech who refuse to take a down round. But if you have a good company in the long term, it's going to work out.
I also don't think we should be so obsessed with down rounds, because if you're a listed company, you can see your share price increase 20% in one day or decrease in 20% in one day. And we don't say, oh, those are down rounds. I mean, your market cap just decreases and it increases, and that's just the way that things go. I think it's more a question of, should it have ever been valued that highly in the first place? That's more the question, versus it's now sort of fallen in value that much. And just on the thing, I mean, look, and obviously a more recent example of a UK business going to the US and not having a great time on the stock exchange was Kazoo, right? I think they delisted earlier this year from the New York Stock Exchange, and they didn't really have any presence in the US market. I think it is difficult. It is difficult to go there, and as a UK company, if you don't have any, or as a non-US company, if you don't have a good presence, Nubank, I think, we said in the previous segment, Miguel, like, they have an amazing brand, and really there wasn't an alternative for them in terms of where to list. Like, as in, there would be absolutely no reason for them to list in the UK because it's not even in the same time zone as where they were. Given the choice, the US would make a lot more sense. But I think they had an amazing brand, and they already had sort of significant momentum in terms of millions and millions of customers, and some very strong numbers in terms of profitability, to make them an attractive business for businesses and individuals to invest in.
And so once they are public, what happens to Klarna now? Like, what do you think is the impact, Dave, on them becoming public? Will that, speed up any conversations about regulation around buy now, pay later? Or is it just business as usual for them? What do you think?
I think it'll initially be business as usual, but it will help them with some of the market expansion significantly for them. But obviously, as they expand the market into the US much more and much more, which is what they'll keep doing, they will naturally be looked at from a regulation perspective, because it will become a bigger and bigger sector of the market over there.
And we spoke last week about how it's quite a cat and mouse situation between Klarna and Affirm at the moment. Like, Affirm is coming to the UK, as we talked about. Klarna's gone to the US, et cetera, et cetera. Do we see sort of other buy now, pay later IPOs on the cards, do we think?
Maybe.
Yeah. Val, last point to you.
Yeah, I mean, I was going to say, probably one of the biggest changes, obviously, going and becoming a public company is the difference in terms of what it means for your employees. Obviously, in terms of disclosure rules, what you can and can't share with your team members, and I know lots of people who worked at Klarna, who work at Klarna, and they sort of pride themselves on being a very transparent organization. That obviously will change in terms of how much can be divulged when you've got hundreds, if not thousands, of employees. And obviously, a good chunk of them, especially those that were there in the beginning, will become very, very rich, richer than they would have been if they'd started their own companies in most cases, right? And becoming an overnight millionaire, it's no longer monopoly money, it's real money. It's money that you can actually, see in your bank account. And that will also change, right? Because people who've sort of been pushing themselves and asking their partners or their families to bear with them over the last however many years, while they've worked, evenings and holidays and everything else, the big payoff is now happening. And obviously, once you kind of see those ones and zeros in your bank account, it can change. It can change for some people the work ethic, obviously, after so many years of sort of the grafting. So I think that's also something. It'll be interesting to see what they do to kind of keep team members motivated. Obviously, this isn't, it's not the first company to do this. Lots of companies, Wise and the like, have obviously gone public. So hearing the sort of internal comms piece, I always think is interesting, and how they manage that.
Yeah, no, that's so true. I guess we will wait and see when this IPO actually happens, and how much for, and how many millionaires are made as a result of it. But yeah, we will keep an eye on that, and I'm sure we'll be covering it when it actually drops. So on that note, we're just going to take a quick pause here and back very shortly.
My dad works in B2B marketing. He came by my school for career day and said he was a big ROAS man. Then he told everyone how much he loved calculating his return on ad spend. My friends still laugh at me to this day.
Not everyone gets B2B, but with LinkedIn, you'll be able to reach people who do. Get a $100 credit on your next ad campaign. Go to linkedin.com/campaign to claim your credit. That's linkedin.com/campaign. Terms and conditions apply. LinkedIn, the place to be, to be.
Before we get back into the news, we wanted to tell you about our latest Insight show. Financial services has a fraud problem. We've covered it a lot on this show. And a lot of people think that digital IDs might be the solution. But as you'll discover in the episode, that is not a solution without controversy. David Barton Grimley is joined by some great guests to find out more. The podcast is out now. Just head to the episode underneath this one to tune in. Right now, back to the news. And our next story is that SME lender iwoca secures new £200 million funding led by Citi, increasing investment into the business to almost £1.5 billion. This story in Fintech Finance. The company has also raised its maximum loan offer to £1 million, aiming to meet growing demand from medium-sized businesses needing larger loans. With recent data showing nearly 1 in 3 brokers expect increased demand for loans over £100,000 in the coming months. Ranked among the top 10 UK fintechs, iwoca has achieved record revenue growth with a 62% increase year on year and has reached profitability in late 2022, continuing to sustain profits. Up to October, iwoca has provided £730 million in loans across 35,000 businesses, marking a 76% increase in loan volume compared to last year. In the report, CEO Christoph Riesch emphasized iwoca's mission to support businesses of all sizes with accessible finance and celebrated the company's growth as a key resource for UK SMEs. To find out more about this fundraise, we spoke to Mark Di-Toro, Strategic Communications Director at iwoca.
What we're seeing on the ground is that medium-sized businesses are facing the same challenges as the smaller ones when it comes to accessing capital. That's why we're offering these larger loans. And looking back, it's been quite a journey since we were founded back in 2012. Like many of the SMEs we serve, we've experienced our shares of ups and downs over that decade. But our team has stayed resilient. We've now reached a scale where we're making a real difference to thousands of businesses and their communities every month. That drives us, knowing that when we help these businesses access finance, we're supporting not just individual companies, but local communities and the communities that they also serve.
Thanks to iwoca there. And Val, maybe you can kick us off here, talking about the general landscape of fintechs supporting SMEs. What impact do we think companies like iwoca and similar are having on SMEs across the globe? Why are fintechs kind of meeting the needs that the traditional banks are not?
Yeah, absolutely. I mean, look, I think we're not quite at that point yet in the UK, but certainly in the US, I think fintechs sort of surpassed traditional banks in terms of SME lending as a proportion of the amount of SME lending that they're doing for the first time last year. And we're not far off that in the UK. And certainly businesses like iwoca, businesses like Funding Circle, and even the sort of the Tides and the Starling banks in terms of their SME lending, they're really filling this gap for these smaller businesses. Obviously, great to see iwoca sort of increasing their loan amounts up to £1 million. They start at £1,000, so you can go from this is really, really small micro businesses through to obviously now larger SMEs. And I think obviously. If you think from OakNorth's perspective, we sort of come in at that $500,000 range and then go up to tens of millions. So, collectively, the fintechs are sort of starting to cover the entire range from sort of £1,000 through to, as I say, tens of millions. And so I think we are going to see, that market share increasing amongst the fintechs collectively. But I mean, still, we're talking about, really, really small numbers here. I think, OakNorth is sort of, we did about 1.7 billion of new lending last year. That's like less than 1% market share. And iwoca said they've done about 750 million or so in total lending. So again, you're still a long way to go before we're sort of, I suppose, eating the lunch of the larger banks, but really great to see, just another fintech that's doing well, that's profitable, that's kind of proven its business model.
Definitely. And the CEO of iwoca said that businesses of all sizes are struggling to find capital. So even though, as you say, this is a very small percent of the market share, there's obviously still a need if capital is not, always readily available for these smaller and starting out companies. Is that a good thing? That there's more and more companies who have access to finance. Does that sort of improve the general ecosystem if more and more of these businesses are being able to be funded by fintechs.
Yeah, absolutely. I mean, I think, look, businesses will take different routes in terms of their growth, right? And there are some startup businesses that will go down the equity route initially, right? And they will, they'll dilute and they'll sell equity in their business in exchange for getting capital. And that comes with different sort of risk profile. Obviously, if you're not quite at the point where you feel like you want to go out to investors, or you don't want to dilute, or you're not looking for that sort of scale of capital, then, places like iwoca, places like Funding Circle, Tide, Starling, etc., where you're looking for loans of thousands, tens of thousands, or maybe up to a couple 100,000, those could be really interesting debt options for you. And then certainly you kind of move into, looking at other types of capital that might be available. It could be equity, it could be venture debt, it could be, traditional commercial lending and so on. So it's great to see that sort of maturation of the market and the fact that there are more players, and you can then, as an SME, hopefully, have a pool of options to choose from. And as I say, I think, it's the UK is one of the best places in the world to start a business. It's sort of, as those businesses scale, making sure that they have that support. We don't do as well there, and obviously capital is a big part of that, and that's where players like OakNorth and others are sort of hopefully trying to fill some of that gap.
Yeah, it's a familiar story, right? In fintech, it costs a lot more to serve these small businesses for traditional banks, and you get that distribution advantage through technology. So these are dynamics that we see obviously in the UK, but in other markets, they're even more pronounced. And I think it's also interesting that I believe it was Citigroup that led this round. That's also a recognition by Citi that, hey, like we need this complement. I actually used to work at Citi many years ago, and I remember, I don't know just how many times our credit committee will reject some transactions that we wanted to do because the potential customer was too small, right? And you hear too small, like, oh, was this a mom and pop shop selling $500,000 a year? No, it's like a company selling tens of millions of dollars a year, right? So it's no surprise. It was very frustrating at the time, and that's why a lot of talent has moved to this kind of platforms.
Yeah, absolutely. But having Citi as a major investment partner, as you say, like obviously brings a lot more than just money to the table for iwoca. It brings that endorsement, as you mentioned, Miguel. What else do you think that puts on the table for them, Dave?
But I think Miguel's point is really important that, the big traditional banks, and when I worked at BNP Paribas, they don't want to serve at that level. It costs them too much to lend to these small amounts out. So actually for them, and for Citi, actually supporting the market lower down is an important thing, because actually that whole ecosystem works well for them. If they can support people who are lending to small and medium-sized businesses who become bigger businesses, then actually they can then drive
Then they can get involved when it's palatable
when they're bigger. So it's actually a self-fulfilling circle around all of that from Citi's perspective. So I think it's a smart move from their side. They get a chunk of the lower down piece without having to actually do it themselves in some respects.
Yeah, so it's quite clever play for them. And then, as you say, they can nurture the businesses that maybe come out of that sort of slightly more risky phase that they didn't want to get involved in.
I don't think it's less about risk. It's about they're just set up in a way that costs too much to lend. And so their acquisition costs on loans for corporates are very high. So small amounts for them, doesn't work well.
Val?
Yeah, I mean, look, look, we wouldn't have a market if we wouldn't have a business if it wasn't also the larger amounts, right? I mean, we do loans of millions and tens of millions, and we're more expensive than the large banks, right? So why would someone pay more for money from us versus money from Lloyds or Barclays or HSBC or whoever? I think it kind of comes down to all the other things. Yes, as you say, Dave, it's like they can't service those customers well. And what does that translate to from the customer's perspective? It's sort of like, it's very opaque. It's very slow. We sort of hear anecdotally in the market, it's 4 to 6 months to a yes, 6 to 9 months to a no. And obviously the opportunity cost of waiting several months for an answer can be very detrimental when you're a high growth business. There's also the fact that they just simply don't understand how to look at a business from a credit perspective that's growing at this rate, right? If you're a high growth business, growing at 20% year on year, the difference between last year and the difference between where you'll be in a year's time is 40%. I mean, you're basically a different business at that point. And therefore, building a credit picture, an accurate credit picture, as you say, can be very costly if you don't have the right technology, you don't have the right setup. And it's also just that there's, it's a sort of very square peg, round hole type of approach. It's like, this is how we've always done it. I'm afraid we have no other way to, this is the way we do it. And so we can't help you. And unless you can change this, this, and this, we're not going to be able to look at it. And it's just not very entrepreneurial. And I think, this is where a lot of the fintechs kind of are very different because, we will be much more flexible. We will be much more transparent. We'll move at a very different speed. And all of those things are just much more aligned with the entrepreneurial and the growth mindset.
You have the same mindset as the customers in that perspective, and that's what the big banks don't have.
Fair. Well, we congratulate iwoca on their raise, and we look forward to seeing what they do next. And I'm going to move us on to our last story, which is that Metrobank have been fined £16 million by the city watchdog for poor money laundering controls. This story on Sky News. The FCA said that the challenger bank failed to have the right systems and controls to adequately monitor for the risk of money laundering more than 60 million transactions with a value of over £51 billion. The regulator identified failings between June 2016 and December 2020 and said that they occurred despite concerns being raised by junior staff as early as 2017. But Metro has since put in place processes to satisfy its obligations. However, Metro has also had several struggles in recent months, which culminated in a recapitalization, quote-unquote, rescue deal just over a year ago. Dave, the Metro CEO is keen to highlight this as a legacy issue, which is now resolved. This is sort of similar to the Starling story we discussed a few weeks back, where historical wrongdoing was being reported and fixed. What's your thoughts?
This is different to the Starling one. If you read the Starling one was very much a process thing, very much about the way that people thought about the approaches to things and the process perspective. A lot, if you read the details on the Metro one, a lot of this is a technology failing, not
right.
linking up the systems properly to actually be doing monitoring on payments in the way that they needed to. So, it was a break of technology more than it was a processing from the Starling perspective. Mm-hmm. So this is a different thing, but and so it's easier to say it's a legacy issue if you fix the technology gap. Mm-hmm. In that case.
I mean, it is a legacy issue, and that it's issues that started in 2016 and went up to 2020. So they are 4 years ago. But how serious is it that despite it being reported by quote unquote junior staff in 2017, it wasn't resolved until 3 years later?
Yeah. You've got to you've got to worry about whether if you're going to be in that world, you have to accept whistleblowing and things like that, because that's how you spot breaks and how you fix things. And clearly, if you're not going to listen to your junior staff, there's something failing in the way that some of those things are being reported and going up the management chain, which you've got to look somewhere. Where did that break stop, and did that not go all the way up to actually be escalated as something that needs to be fixed quicker?
Yeah, I mean, the FCA's words on this, they were not mincing their words. So they said, Metro's failings risked a gap being left in our defence against the criminal misuse of our financial system. Those failings went on for too long. They're being very definite in this being a serious problem. Val, what was your thoughts on this? They were fined £16 million, but actually that was a reduction in what they were originally going to be fined. They were sort of let off for good behaviour for resolving the issues quickly. What's your take on this one?
Yeah, I mean, look, that's not uncommon. Most of the time, you'll see from the big banks. You saw it in Starling's case. You saw it in Metro when they were fined a couple of years ago, right? Back in 2021, they were fined for failing in the regulatory reporting, governance, and controls, about £5.4 million. So, it does feel a little bit like Metro can't really catch a break. They're sort of like, and I have a sort of a bit of a soft spot for them. They were my first client outside of when I graduated from university. There was the first sort of client that I was assigned, and this was back when Vernon Hill was still there and Anthony Thompson, and and I think they obviously at the time were building a business that was very novel, right? A sort of new branch-based bank that was going to be open 363 days of the year, and you could bring your dog in and you had your coin counting machines and everything else. And it sort of feels like obviously they've had to make so many changes since then, closing branches like so many banks have been doing. And, the coin counting machines are not really a sort of a staple feature anymore. And obviously they have been, they've been sort of experiencing tens of millions in fines from these various controls. They've had lots of change in leadership over the years. So I do think there are obviously a lot of ongoing challenges. And I think, I guess I say it's quite normal for fines to be reduced slightly if the institution cooperates. You see that with the big banks too. I think, look, Starling, Metro, others, they tend to get a lot more press because we like to sort of I guess show, oh, well, they're not really, they're sort of the same as the big banks and they're getting fined too. But actually, compared to the big bank fines, these are still really, really tiny. And I think if you just Google sort of, any big bank name and fines, you'll see, okay, fine, there's actually, these are things that tend to happen in lots of institutions. It's not just the sort of the challenger banks, the smaller banks that face these challenges.
And also their fine was relatively small in comparison. So they were 16 million. Obviously, it depends on your own book size in the first place. But the biggest fines ever given out by the FCA are all over £100 million by comparison. So, it's not enormous. That point, though, about sort of tearing down neobanks and, sort of saying, oh, they're just the same as the big banks or sort of attacking their reputation a little bit. Starling, Revolut, Metro have all been kind of chastised and fined in the last few months. Again, about this sort of lack of money laundering protection. Miguel, what's your thoughts on that? Do headlines like this do more damage than the actual fine to the reputation of these companies? What do you think?
It seems that there are three certain things in life: death, taxes, and some random bank will be fined this week for compliance issues. So it's across the board that this is happening. You talk to bankers, banking leaders, and especially in the US, but I think this is also applicable in Europe. There's almost this resignation, this feeling that you're either gonna spend a lot of money being compliant, and that's gonna affect your profitability in a meaningful way, or you are gonna accept that you will be fined, and you're also gonna pay a cost for that. And you kind of have to measure, okay, which one is gonna be worse for the bank, which shouldn't be that way, right? That's where I am very hopeful about technology. Every CEO that I talk to, every investor, fintech investor that I talk to, almost every conversation, they bring up identity management or compliance as a focus area, right? Either founders want to see better tools or investors want to find those tools and invest in those. The biggest driver is it's not just reducing headcount, but improving the accuracy, right? I mean, here we're talking about a technology issue. Sounds like something that is solvable, that could be solvable. We have invested in two companies that are actually tackling this space in different parts of the world. One of them is called Base Layer, a KYB company for US companies, and the other one is called Niva for non-US. Both of them, have small, medium, and large size customers knocking on their doors because the need is so big for this, right? And so it's a big issue. We should be paying more attention to it. And I think we're going to see some big companies emerge to try to solve this.
What's your thoughts, Dave, on that, fixing that tech? problem? Is it a tool, or is it just the wrong implementation of a tool in this case?
In this case, I think it was the wrong implementation. But I also think, the neobanks are an easy target for the press.
Yes.
They like to go after a good news story. Someone who's doing well, like to give them a kick, particularly UK press, like to sort of go over these things. And this probably got a lot more press than, you think some of the things currently that are going on around car loans in the Lloyds Banking Group world, which is massive numbers of mis-selling of car loans over many years. Yet, is that all over the press? No. So, I think it's, they seem to have a preference in particularly UK press to go after these guys.
I agree. Val, give us the final word on this. Metro's already had a tough year. You kind of mentioned some of it. We talked at the top about the sort of rescue package of like equity and debt financing. They've also looked at selling their mortgage book. They've also looked at selling themselves, in fact, like looking to see if someone will buy them wholesale. No takers yet, but who knows. What do you think is the future for Metrobank after all this?
I mean, look, I don't have a crystal ball on that, but what I will say, I think the future of just sort of fining generally, I mean, if you think look at the US, and about a dozen or so banks have been fined for sort of mishandling customer data and sort of keeping customer records on things like WhatsApp, right? I think we're coming up to about 2 billion of fines to about 11 or so banks in the US. Obviously, a big news story this week was that NatWest has sort of banned the use of WhatsApp. I mean, again, most banks will say don't use it. It's not a sort of official platform that people should be using to interact with customers or to have any kind of customer data. But obviously there you can see very significant fines as well. And I think that's actually one of the big ones that we could see in the UK market. Obviously, we've seen car finance. We've just lifted the hood on that, not to kind of have a horrendous pun, but I think obviously people are comparing it to PPI scandal. So I think there's a lot of different areas where we're going to see, these challenges, and obviously a lot of banks, including Metro, are now, which have been doing anything in car finance, they're now looking at their process, they're looking at their records, their contracts, and they're saying, okay, how can we sort of firm these up? So look, hopefully they'll kind of get the various controls in place across all these things, and they'll sort of preempt some of the potential fines that could occur in the future from things like using WhatsApp or car fines or what have you, or car finance, sorry, and then hopefully they'll have a better run kind of in the years ahead.
Let's see. Okay, now for a quick look at one more news story this week that we don't have time to cover in full, and that was that GoHenry urges the government to make financial education compulsory in all schools at a parliamentary reception. The story in Fintech Finance. The UK-founded financial education app for kids, GoHenry, urged the UK government to make financial education compulsory in all schools from primary age. Louise Hill, GoHenry's co-founder, highlighted that 84% of young people want more money skills taught in school, with nearly 70% of 18-year-olds feeling unprepared to manage money after graduation. GoHenry's Financial Education Manifesto calls for financial education to be part of the Personal, Social, Health and Economic (PSHE) curriculum. MP Claire Hazelgrove backed this push, citing evidence that financial habits form by age 7 and stressing the need for equal access to money skills across schools. 12-year-old Syra, a GoHenry customer, shared the importance of learning practical money skills early on to navigate adulthood confidently. So this actually is a welcome back to the podcast for 11FS CEO David Brear, who felt very, very strongly about this one when we were discussing it internally, and he sent us this clip.
Hello, everybody. Now, this is one that's very close to my heart, having a 12-year-old boy and a 10-year-old girl. I think maybe if we start with looking at the pros, I mean, financial literacy is absolutely crucial. It's something that affects pretty much every decision that we make as adults, from everyday spending to planning for our future, from budgeting for rent to managing credit card debt or saving for retirement. Now, these are all really essential skills in our day-to-day lives, yet many people reach adulthood really without a solid grasp of how to handle money responsibly. Imagine if we could change that by introducing financial education into schools, giving people a much better start. Now, one of the biggest benefits of this is empowering people. Financial literacy can really empower young people to make much more informed choices, to understand the consequences of debt or what debt even is, and to plan for their future. In a world where debt is skyrocketing and actually the complexity of financial products more complex than ever, this knowledge could prevent really costly mistakes that affect the rest of people's lives. This isn't just a small thing, it's a huge thing, which is why it's worth the debate, but increasingly, I think it's just worth the action. Let's start doing it, and hopefully it'll make people's future a little bit brighter. Back to you guys.
There we go. Safe to say, David is a big fan of that initiative, so we will see how it plays out, but it definitely has his support. And finally, a look at something a little bit more lighthearted from the world of entertainment this week. So Lena Dunham is to write Sam Bankman-Fried movie for Apple. The story was in Variety. It was only a matter of time. Apple Studios and A24 are teaming up to adapt Going Infinite, Michael Lewis's recent bestseller, into a feature film about the meteoric rise and dramatic collapse of FTX and its enigmatic founder, Sam Bankman-Fried. Lena Dunham, most notably known for her work on Girls, is on board to write the script for the film, which promises to unpack the complexities of the crypto world, Bankman-Fried's rapid ascent as one of its youngest billionaires, and the shocking downfall that followed. Thoughts on this? Will anyone want to watch this when it hits Apple in recent years, months? Dave, you're laughing.
I'm just struggling to see how exciting something about crypto could be to watch a film, but I think it's probably
Don't
more
tell
about...
us the crypto guys. They think it's very
exciting. It's probably more about the people involved than it is actually crypto itself.
People love they love an underdog story, right? And they also love a story. It's a bit like why do people like to watch sort of horrendous dating shows or The Apprentice, right? Because we do like to sort of we have this sort of morbid fascination with failure as much as we have a sort of exciting fascination with success. And look, there's obviously entire books that have been written about failed companies that have sort of reached significant prominence, right? I think about businesses like Theranos and Bad Blood, right? And there was an entire show there with I can't remember her name. Is it Amanda Seyfried?
Yeah.
There we go. Thank you. And she sort of is the protagonist. Then you've obviously got WeWork and The Cult of We. That's a book, and there again, I think it was Apple that did a very entertaining series there about WeWork, and it had Anne Hathaway was playing the role of Rebecca Newman, and she does a fantastic job, and she's sort of very very funny. And so I think there is definitely a market for this kind of thing. It's going to be a bit niche, right? You either have the sort of documentaries, and then you have the the dramatized versions of what actually happened. But I'm sure that I'll certainly be watching it when it comes out.
There you go. Well, I guess fine. Go on.
I'm just excited to see who is going to play SBF. My money is on Jonah Hill. I think he would be very entertaining to watch, and kind of can pull it off. But yeah, I agree with Val. I think this is going to be a blockbuster if done correctly. I mean, look at Wolf of Wall Street. Look at American Psycho. These are all crazy stories that almost have cult followings. Yeah, I think it's going to be entertaining to watch.
Yeah, definitely. I think it's sort of the subject of like the people behind the sort of financial crimes. This is not a new genre. You've had like Inventing Anna, Wolf of Wall Street that you mentioned, Catch Me If You Can, even like The Big Short. There's a lot of content out there, big movies about kind of machinations of financial services, and also like and people love to also watch teardowns and failure, as Val said. I think if they market it in the right way to tell that kind of human story around Sam Bankman-Fried, not just the crypto side, I think they've definitely got a sort of sensationalist story there that could.
But I think if you look at some
appeal.
of those big things like Wolf of Wall Street and the Big Short and things like that, it's almost fantasy to a lot of people because they just don't see that world and what it is. So it is beyond reality for a lot of people. That that could actually really happen in the real world.
What do we think it does for like the reputation of the people involved? So, could it was sort of glamorizing the character? I mean, maybe not, depends how the production turns out, but the, glamorization of SBF, the subject of inventing Anna Sorokin was also recently a contestant on Dancing with the Stars, so I don't think that went well for her in terms of her success on the show, but is there a risk that we're kind of glamorizing these people and giving them a sort of second chance via media?
I mean, look, I think a lot of things, these people, they're big personalities, and so whether you know about Sam Bankman-Fried or not, whether you know much about crypto or not, I think or people like Anna Sorokin, I think it's sort of like, well, you might have as I say, big personalities, and I suppose the most obvious example of that was sort of in the business world and how that's sort of related into every day is Elon Musk, right? And everything, obviously, his sort of prominence and the role that he's played in the recent US election. So I think people are attracted to big personalities, and then that's going to sort of, if they think, okay, well, we can get more people to watch this show, or we can, sell more subscriptions if we get this individual, we make something focused around this individual. And look, a lot of these people are very big personalities, right? I mean, again, Adam Newman was sort of, a big personality. You've obviously got a number of other shows and movies that have been made about very successful businesses, right? Super Pumped based on Uber. You've got Social Network based on Facebook. So again, I think it's not just about, I mean, they also celebrate, or rather they do movies and shows about highly successful businesses, albeit with the challenges that those businesses have faced. But yeah, I think anywhere where there's a big personality, a big businessman or woman, that's going to attract attention and attract viewers.
Absolutely. And so before we end, who would you like to see made into a film? Whose journey, whether that's a company or an individual, do you think would make a good either documentary or film? Oh, that's made you go quiet. Miguel, kick us off.
I would like to see the story of Bloomberg turn into, I think he's the fintech OG. No one in fintech talks about Michael Bloomberg. So I think that would be interesting. And also he was a complete character, very strong personality, very strong leadership style, that I think is underappreciated. And he's a New Yorker. He built a company in New York, which I like. I would watch that film.
I think probably Whitney Wolfe, head of Bumble. Again, kind of like amazing story, dating the co-founder of Tinder and sort of had a horrendous experience, and then sort of used that horrendous experience to build her own business, which she then built into like a multi-billion-dollar company that listed, and she's sort of like holding her baby as she like presses the button of the bell. I think there could be, there's a lot of pretty iconic moments in her story that would make for a lot of, nice Hollywood.
So
Hollywood
the
movie
catalyst
moments.
for Bumble was having a bad experience dating one of the co-founders of Tinder.
Yeah.
Huh. I did not know that. That is a great origin story.
And I believe she was also building Tinder.
Yeah, she was
part of the management team.
Yeah, 100%. Yeah, she was like, I've completely like, undersold her there, that she wasn't just his girlfriend, but she was very much involved and had a very negative experience. And she kind of used that to build, an amazing business, a very large, very successful business. So, but I think there was a whole kind of legal backstory there and everything like that. And that would probably be quite interesting to sort of see that play out on screen for sure.
I don't know. I do know I was in Marrakesh on Monday. Someone mistook me for Bruce Willis, which was quite funny.
That made your week?
It definitely made my week, or maybe I was just looking very old that day. I don't know.
Speaking of which, if there was any doubt about Bruce Willis movies, Die Hard is a Christmas movie, so make sure you watch it. In this season.
There we go. Miguel has spoken. I think I'm going to have to leave it there on that note. That wraps up this week's Fintech Insider news. Thank you so much to today's guests. Where can people find out a little bit more about you and your companies? Let's start with you, Dave.
Yep. Dave Morris on LinkedIn, or all over the various bits of content on 11fs.com.
Fantastic. Miguel?
Miguel Armaza on LinkedIn, Twitter, or now X, and anywhere podcasts are found under my name or Fintech Leaders. And if there are any entrepreneurs listening or anyone thinking of starting a fintech company, please reach out.
Fantastic. And Val?
Yeah, so Valentina Kristensen on LinkedIn. And if you want to learn more about OakNorth products, whether that's lending products or a business banking account or business savings account or a personal savings account, then go to www.oaknorth.com.
Brilliant. And as for me, Laura Watkins on LinkedIn or otherwise 11fs.com or the Fintech Insider podcast. Thank you so much for listening. If you like what you've heard, please follow our podcast. And if you really want to help us make a better show, you can do so now by filling in our listener survey at 11fs.com/survey. And if you're listening on Spotify, you can now drop us a comment and tell us what you thought of the show. And as always, if you want to join the conversation, find us on social media. Just search for 11fs or Fintech Insider or email podcast@11fs.com. We also now have a brand new WhatsApp community channel where you can get the inside track on all of our content. You can get involved via the link in the description below. Thank you very much and goodbye.